Hi, everybody. I'm Michael Bacha. I'm the co-founder of Optima, and together with me is Delia, the other co-founder of Optima. And we thought that maybe we're going to start recording our conversations about what's happening in the market and also give people some updates about what's happening with Optima. We're recording it on a Wednesday, and today we published our blog post about the market update. You can find it on blog.optima.financial. And the blog is titled, What is crypto market? Why is crypto market liquidity tightening despite strong fundamentals? So, yeah, what do you think is happening?
Hi, everyone. Welcome again to our first podcast. Hopefully, you'll get some nice insights into first kind of the macroeconomic environment, how we see in crypto, and also kind of what's new in Optima. So, yeah. Hi, everyone.
What are your initial thoughts?
I mean, the initial thoughts are kind of what we saw on Friday was scary, was literally the whole liquidation of the crypto. I didn't really think that we are going to see this right now in October, actually. Those type of volumes, magnitudes of volatility and price drops, I don't think we saw them since 2021. But I think before we dig into that, because there are several aspects why that happened, right? One is the macro level of why did we get there and why did it happen? And the second is the technicality of kind of the trades and what really happened if we kind of look a little bit more into the on-chain data, analyze a little bit of volume and try to understand what caused that kind of huge liquidation in the market on Friday. So I think I will just kind of step back a little bit and try to really understand what triggered Friday move. And I will start with the China-US trade war. And I think what really happened is on Thursday, China, what was the Minister of Commerce, they published a new framework for rare earth exports. And that new framework actually started requiring any company anywhere in the world to get authorization from the Chinese government to export any product that contains 0.1% or more of the Chinese rare earths or any type of product that was produced using the country's technology. This is huge. Keep in mind that China actually owns more than 90% of the rare earth minerals. Right, this trickles down into anything from military to AI components, semiconductors, chips, any type of technology. So it's big, right? That was on Thursday, but nobody really paid attention. On Friday, he woke up and realized, oh, this is really big. I didn't win the Peace Nobel Prize. I'm really mad. Let me just go out and actually take a stand on this. On the other hand, he had to take a stand on this because this really puts a lot of constraints on US economy and especially on the AI development. So it was a surprise on Friday, but I don't think it should have been a big surprise. First of all, if you dig a little bit more, the Chinese really played into the US playbook because the US started putting all those constraints on Chinese exports and semiconductor technologies and companies starting in 2020 or something. So right now, there are more than 3,000 Chinese companies that are on the US list of being prohibited to do businesses with the US versus, I think, 800, 900 on the other side. So that triggered the whole macro meltdown in the US markets. They say S&P 500, I think, dropped 2.7%. NASDAQ was close to 3.5, I think. So those type of magnitudes was like all triggered by this trade war between China and the US. Everybody in the stock market or investors, they're still very complacent, I would say. And they woke up to this tweet saying, hey, actually the trade wars is not done. We thought it was all done. Let's go back to April. VIX spiked. We saw it above 20 right away, which was very complacent in mild levels before that. And that really triggers through all the risk assets, right? And this is what we saw in crypto. So crypto was not isolated with this. We all think about crypto coin, Ethereum, and all crypto assets. They don't really move with what's happening in the macro environment or the stock markets, but actually it was a reflection that it's all risk related, and everybody started kind of panicking across the crypto. They saw the Bitcoin actually going from, I think it was 117 before that, to dropping close to 104K, more than 10% in literally 30 minutes. And we saw Ethereum actually dropping more than 14, 15%. But actually, Solana was down almost 40%. Can you believe that? 40%. I mean, this is not an altcoin. I mean, this is literally in the top 5 crypto assets. And I mean, it was higher than 2021's volumes that we saw, or magnitudes that we saw during that meltdown. I don't know if you want to add something to this, but I think I would like after that to add a little bit of what happened actually in different sub-markets, or what, I mean, for me, the scariest thing was literally the abnormally minus. So I'm not sure if you look into that, or the way the crypto exchange actually behaved during those moments was very abnormal and actually trigger a lot of liquidations outside of what happened with the derivative markets.
If we're talking about the causes of all of this, you can say, okay, people woke up and they didn't realize that the trade war is not over. But on the other hand, maybe it was just a catalyst. And some other similar news could have triggered it, because maybe we are in a slightly different environment on the macro level, where the liquidity is tight, because we have, on one hand, we have tariffs that are collecting north of 80 billion so far, right? So this is liquidity that was removed from the market. And also we have government shutdown, right? So all those paychecks to all those government agencies that would materialize in the market, now it's gone, right? So we have a vacuum. So I would say we have way more fragile order books. And it's actually very interesting that, we are experimenting with this active strategy that looks at market data. And actually on a Tuesday night, my time in Europe, it actually saw this data in other books and decided to pull out of the market. It was like, 12 hours before the tweet, right? 18 hours before the tweet.
Thursday, not Tuesday.
Yeah, sorry, Thursday night. And on Friday we had this tweet, right? So this is one thing. And another thing that I'm actually very happy about is seeing that, okay, there was this flash sale and liquidations, and it said, Solana going down 25%, but it went back immediately, right? Not to the same level, but somebody picked up all those cheap coins. So this tells me that it was a liquidity issue on exchanges, not necessarily everybody panicking the same way.
It was. And actually, I was digging a little bit more over the weekend, right after Friday flash, or Black Friday, the way they're calling it in crypto right now, the October. I did a little bit into the on-chain data and any type of volume data that we got. And actually, it was interesting in Binance, right? So Binance, actually, it was a tweet put out, actually going through some of the notes there. So in most of the trading accounts in Binance, you trade against USDE as their base currency, right? The stable coin. And this is the base currency for most of the trading. Interesting enough, on October 8th, I think, Binance came out and they said that the price for the USDE is not pulled by Oracle. It's by their internal order book in Binance, which is a major vulnerability, right? I mean, think about that. If you start having those thin order books in certain kind of pairs, and then your price is set by the order book, you can manipulate that price. And this is what really happened with the USD. So Binance came out, I think it was October 8th, and said, hey, we are going to fix this. And by October 14th, which was an 8 days windows. Actually, before Trump's tweet, actually, it was a dumping between 60 and 90 million of USDE on Binance on those order books. And that drop, that caused the stable coin to drop to 65 cents. On Binance, it was still pegged to 1, right? Internally, it was dropped to 65 cents, right? So USDE is used for collateral on Binance. All those margin accounts, everything is based on USDE, right? So dropping that price to 65 cents actually triggered a lot of liquidations across a lot of accounts, right? And this was before the tweet. The other thing, technical issues, right? Everything trade, everything kind of the liquidity, the shutdown in the US and everything. There are some technical aspects that really caused this crypto crash on Friday, the macro and risk assets, the equity, the bonds, and everything else that's happening, right? And then on top of that, 30 minutes before the tweet, which was an insider trader, someone pulled 110 million USDC outside of Arbitrum and placed the bet on Hyperliquid to short 1.1 billion of Bitcoin and Ethereum. And that was 30 minutes before the tweet. 30 minutes after, they closed the position at the bottom, like literally dump it, and they made 200 million profits, literally within a span of an hour. Huge. Keep in mind that Binance was already affected, right? So now dumping on other markets and triggering this drop in Bitcoin and Ethereum, those are big market cap crypto assets, right? The gold standard of crypto, they went down more than 10%, 10, 14, 15% right away within a span of an hour, right? Move to Binance now because Binance pulled those prices and trigger another wave of liquidations across everything else, right? So I think those are also technical aspects that happen. Of course, after that, markets calmed down. Trump came back over the weekend saying, forget about China. We are all good. Now risk assets are back on, right? What's open over the weekend, of course, is the crypto market. Started kind of pulling up a little bit. And now it's like they're trying to figure out what's the support level. Now they're kind of resetting, right? What was the level that you see? Is 110K? Is 115K? Now you just need to let the dust kind of settle a little bit, figure out your new bands for technical trades, and take it from there, right? Your orders get all reset, volatility reset, volume reset. But I think those two are really technical issues, the Binance abnormal trade that happened and the volume, and then what happened on Hyperliquid with the derivatives.
But overall, it only shows you the higher maturity of the market, right?
Yes,
Despite
yes.
all of this, because I'm looking at the chart right now. So last 7 days, Bitcoin down 9%. So it's not dropping like a stone, right? There was this flash event, and then it recovered. And as you said, now the market is looking for the new baseline. Okay. So, question for you, because people who might watch it, they just are asking themselves a question like, what does it mean for me and my investments, right? Do you have any recommendations or like, what are you doing with your money in a market like this?
You have to actively manage them, right? So I think we all went through like few years of complacency, like in the market. It's like you buy the passive, you buy the index, and you sit there, you keep it, right? And I think this is exactly what paid off. However, if you are kind of more actively manage your investments, I think you're going to be better off, right? All those kind of, if usually when the volatility picks up in the market, this is the good time actually for the traders. This is a really good time for active managers. So my advice is just kind of try to be a little bit more active and not just kind of buy and hold a certain type of assets or indexes.
No, but how does an average investor do that? Like, because look, it's true that volatility, it means you can make a lot of money, but it also means you can lose a lot of money. Timing is everything. Is today the right moment to enter, or should people cut their losses and just sell right now?
I mean, it depends. Is
What
it you who are actively manage your funds? Or, I mean, if it's you, right, you really need to be on top of the market. You really need to look at certain kind of data, indicators, signals, and try to be really on top of your trades. Be more proactive on getting in and getting out. there is no rule that covers everything. It's not a blanket that covers all kind of the ideas. And it's nothing that I can say, hey, get into the stock market or kind of increase your position in gold or increase your position in bonds or try to actively manage and increase your position in Bitcoin because right now it's low. Those are moving parts. So you always have to actively kind of allocate across different asset classes. So of course, with Optima, we try to do that. We are going to launch within a week or two several active strategies. And as you said, Michal, earlier, is like we feel pretty comfortable with our strategies. I mean, Thursday, right before the whole market crash, we are sitting in stable coins. We are sitting in cash, right? Because all our kind of internal data signals told us, get out. There is a lot of risk and there is a huge downside risk right now that it's better off to be on the sidelines and be in the cash. So what triggered that? Data, internal data like order books, right? Or volatility or the volumes or type of trends or technical indicators. So we look at all of this and our combined signals said, yes, there is a huge risk on the downside and try to kind of observe it, stay on the stable coins a little bit. So yeah, be a little bit more proactive. Try to engage with different financial advisors or different providers of those active strategies if you can get into them. Otherwise, reach out for any type of advice, but it depends on the risk return profile of each person.
Yeah, the way I see it is it depends what's your investment horizon. I think it might be a good entry point, even right now, for somebody who doesn't care about volatility over the next 3 months. I think that over the next 6 to 12 months, we're going to have another bull run. So this is not going to be the lowest price of entering the market, but it's definitely 10% better than last week. But on the other hand, I wouldn't be surprised if it's going to go down by further 5% over the next week, especially if there will be some other big news or some other tweet about tariffs or something like that. Another catalyst is going to, or I don't know, we're going to find out that one of exchanges went out of business, right? Because why not? They just ran out of cash because they were betting on the side of the trade. It can happen, right? But FTX was great and, celebrities advertised it and went under. But if you are really cautious and you really want to make sure that you're not going to lose money over the next month, that you find yourself a good active strategy, or you just maybe stay out of the market for a while until the dust settles.
Yeah, I completely agree with you long term. There are a lot of catalysts to move the market higher. There is still a lot of liquidity in the market. The Fed is cutting interest rates, so a little bit more liquidity. You have the midterm elections coming up in the US. I don't think that anyone in the US government wants actually the stock market or any type of financial markets to go down because just to boost consumer confidence. However, in the meantime, there are going to be a lot of peaks and valleys, ups and downs. And with this volatility, active strategies are going to outperform any type of passive strategies. And this is kind of where I see right now. It's huge opportunity to be a little bit more proactive. Of course, you can sit in your positions, hold them if you can afford to hold them. Don't over leverage. I think leverage is going to kill any investors, which is not a professional investor during times. So you have to be very, very careful with leverage. But if you want to hold it, yes, hold it for long term. Months definitely will be higher from here. Even 6 months will be higher from here. But a leverage position can actually kill you, liquidate you at the wrong time. And you may not be able to recover. Just be careful with the leverage. After Friday crash, I mean, you definitely see the open interest positions actually went down significantly. The leverage in the market is actually down, which is a good thing.
Okay. So rule number one, don't leverage, because it's more important to preserve your capital than to maximize your returns. Yeah, being a bit more conservative. losing 3% instead of 30.
Yes.
Let's say it's always a good idea, right? If you can get into some active management. And then another thing, I don't know if you agree with that, but looking at the market, you see that the lower market cap coins went down disproportionately more than those blue chips, right?
50,
And
70%.
traditionally,
50,
yeah,
70% intraday. Unbelievable.
So, I mean, traditionally people got rich quick by trading those altcoins. And now you can lose everything quickly trading those altcoins. If you look at the coin market cap list, you can see where those double digits losses start, and this is where institutional money ends. Because you don't
Yeah.
have anybody who has a longer investment horizon, and they're gonna say, "Oh, Bitcoin went down 15%. That's a great opportunity. Let's pick some of this up."
Mhm.
You have people just dropping all of it and other people being deleveraged, and then nobody stepping in because they say, oh, I'm not going to catch a falling knife.
Also, there are
Interesting.
signs that the market is maturing, the crypto market is maturing. I mean, you see that, yeah, the top 5, they went down a lot, but they recovered, right? I mean, you could definitely see, as you said, the institutional investors are picking up bargains. But they're not picking up bargains necessarily in the very low cap altcoins type of universe because it's very risky. So those are the ones that don't generate revenue, right? So yeah, you don't see that big movements at the long tail of the market.
Okay, so we have one question from our community member. And the question was about the fact that, based on some analysis, two sectors of crypto that actually made a lot of money is exchanges, so tokens issued by exchanges or centralized finance, and other is the privacy-focused coins that are actually up by a lot this month. So the question was like, when will we have those baskets on Optima available?
This is a really good feedback. We don't have a basket for privacy tokens, and I really want to create one. And I'm hoping to get that out as soon as possible. I cannot put a date, but hopefully by the end of October, we can have the privacy token basket out there available. I think one of the value proposition of Optima is that if we really get this type of feedback, that the community really wants a particular theme or a particular basket to be built, we have everything in-house. So the whole value chain of designing the basket, so integrating, rebalancing, reconstructing, trading, and offering is all in-house, right? So as long as the feedback is there, people are interested in a particular theme, but as soon as possible. Keep sending those to us because I think this is a great feedback to get. As far as the centralized exchange, we do monitor a basket for the centralized exchange, the same as the DEXs, decentralized trading. Been performing really, really well. And it makes so much sense, right? Because it doesn't really matter if the market goes up or down. The sector or the industry that benefits from volatility or increasing volume are those trading exchanges. Because you trade even on the upside, but you also trade on the downside, right? So the volume is there. Those protocols actually make a lot of money regardless of the direction of the market, right? So that's why I expect those centralized or decentralized exchanges to be very profitable and the performance to be very high. So we are going to launch all those baskets next week. So keep an eye on that. We are kind of really in the last testing for the baskets. So we are going to launch a wide range of baskets that can be traded on Optima.
Yeah, I think with CeFi, we were still missing the integration with the exchange to trade all the tokens.
Yeah, which
but
can
yeah,
be another week in addition to that. Yeah, with the CeFi, you're right. You are the product manager, so everything goes to you. If we get any delays on Optima, it's mostly because of Michal. Just so we have we have everything straight here.
Thank you to our community for suggesting new products that you want to buy. This is great. Let's keep chatting on Telegram, and you can always reach out to us on Twitter and on LinkedIn. See you next time. Thanks a lot, and bye-bye, everybody.
Thank you.